All right, so we're going to go ahead and get started. Good morning, everyone. My name is Micah Matthews. I'm one of the marketing directors here at Messer Financial, and we are coming to you live from our headquarters here at Mint Hill, North Carolina. We are pleased to be joined by Jeff DeSantis. He is the Field Development Manager for NSS, which is National Slovak Society. We got a lot of really good information to share with everyone. It's a great product. You're going to have an option for any age person. So if you're doing any kind of life insurance, final expense, dealing with seniors in any way, you're really going to want to hear some of the things that we have to go over. I'm sure you've probably seen them. For anybody who's ever used our quoting tool on messerfinancial.com that has ever quoted a final expense person or client, you're always going to see them at the top. Their rates are unbeatable. And it could be a great asset for you. For those that have a poor retention rate or having trouble keeping those on a final expense product because maybe someone either undercut them for price or whatever the case may be, this is going to be your perfect answer. Plus, it's just a great value for clients, and we're going to go all over that for you. So for those of you who haven't seen it yet, what you're seeing right now is messerfinancial.com's homepage. For future reference, if you ever want to quote it under Agent Resources, if you go right to Quote Tools, it'll take you to right to all of our quote tools. So basically, whatever product you're wanting to quote, it's going to be available here. If you need to quote an ACA plan, for the Medicare supplement, Medicare Advantage, PDPs, hospital indemnity, final expense, or dental quotes, you use this tab. So just as a quick example, we'll go ahead and click on that. And then we'll run a quick quote for final expense. And we'll just run a quick illustration here, 28227, that's this zip code. We'll just say female, $10,000 benefit, and we'll just say 65-year-old for this purpose, non-tobacco. And then when you hit get quote, guess who's going to come up number one? You'll see it here in just 1 second. And there you go, National Slovak Society, number one. So basically, wherever you quote this in the country, they're always going to basically come up on the top wherever they're available. There are some differences between them and traditional final expense carriers, but I'll let Jeff DeSantis go over all of that with you. Feel free to type in any questions that you might have, and we'll go from there. So with that, I'm going to turn it over to Jeff DeSantis, and we'll get started. Jeff?
Thank you, Micah. Good morning, everyone. Thank you for joining this morning. I'm going to try to take this in three segments. I'm going to give you an overview of our company. I'm going to give you some highlights of some different products that we have that I think will be helpful in the field for you, for door openers, and also unique products to our company. And then finally, I'm going to go to the quoting tool that we have, our software that all agents get. And I'm going to do some illustrations just so you can see how our cash values grow in our products and how unique it is to NSS products. So first thing is, again, NSS stands for National Slovak Society. We were established in 1890, so we're 128 years young. Again, it's a nonprofit, so that's why some of the premiums that you see that Micah was quoting you, that's why we can give you those pricing, because we're not a corporate company. We don't have to pay stock. We don't have to pay our board members, and we don't have to pay to our shareholders. Again, we offer life insurance and annuity products. Our annuity products are all fixed products, so you don't have to be a licensed broker to sell our annuities. Just have to have your life license. We hit last year over $1 billion in assets. Again, our portfolio is made up of 99.6% of our portfolio is high yielding, bonds, stocks, and when you look at it through Moody's, it's a rating of A2 and S&P rating of A. So we don't invest in any junk stuff because we want to make sure that we're around for another 128 years. That won't matter to me or Micah. We won't be around for that. But anyways, again, we have around 30 million plus in total surplus. In fact, that's a little higher now. That number it's actually 40 million. I didn't update that. Again, 2018 is another great year for us, and if you can look over our past 5 years, our assets are up 166%, premium is up 400%, and our surplus is up 42%. So we're trending, every year we're going up about 200 million, in assets. So hopefully in the next probably 4 years, we'll be about $2 billion. So any client that you write with us is safe. Some of the things that we have unique about our products or our company is we have scholarships, and we'll talk a little bit about that. So Mike will remind me if I forget when we're in the midst of this. We have some things for our all members. We have golfing and bowling tournaments. We have youth programs. We have a lot of contests. Publication comes out monthly, and each person that gets an annuity or a life product with us will get a publication that comes from the home office. It'll be mailed out to the client. Again, the heritage is, our Slovak heritage. We have a museum in our home office. Again, you don't have to be Slovak nationality to buy our product. And there is no membership fees. We always get, once you buy a product, you're a member. There's no membership dues. Once you get in, some companies charge you $50, whatever it is, a year. There's no membership fees for us. Once you're in buying a product, you're there. Products we have, again, is life insurance. We have annuities, IRAs, Roth IRAs, Coverdells, and we have an investment growth fund, and we can talk a little bit about that later, the investment growth fund. Our term products, we have a youth term. Mike and I were just discussing this. It's available from ages 0 to 22. I'm going to show you the brochure a little bit later on, but just real quick about that product. This is a great, great door opener for you when you're in talking to parents or grandparents, because the coverage is from age 0 to 30, but they pay on it from 0 to 22. And when I tell you what they pay for this, for example, if you wanted $50,000 coverage for your, say you have a 5-year-old grandson, you could either pay $50 annually for the $50,000, or you can pay $500 one time, single premium, and that child would be covered to age 30. But it gets a little better, and I'm going to, like I said, show you the brochure on that a little later on. But once they get that, we have to insure them. The guarantee is that we have to, when we convert it, if you want to convert that before age 30, we have to guarantee $50,000 worth of coverage in our regular standard rate. One of our products would be our 20-pay life, whole life, or single premium. And the reason why I think that's so unique is because I have a child who had a heart surgery at age 11. It's hard to get her insurance, but I did have her in a fraternal product. So this product, so now when I can convert this, which I already did, to $50,000 a premium in a 20-pay life, that's what we did for her. So she's covered. So that's a really good thing to keep in mind. It's a great product. It's a great door opener. It's also a thing that grandparents can leave a legacy for their grandkids, and also something for the parents, for their kids. We have the 10-year term, 20-year term, and our term is not very strong as far as in premium. And I tell you that up front because it's not when you look at some other companies. But when you look at our 20-pay life and our whole pay life and single premium, you'll see that those products will probably most likely, when Micah was showing you the illustrations, will come up to be the top on the premium as far as the lowest cost. Again, annuity advantages, we have an interest rate of 3.5% for our 8-year annuity, and then we have a guarantee of 2% right now for our annuities. We do have, tax-deferred earnings. You know a lot about this if you've been an agent for a while. And again, there's no fees or charges. Our products that we have in the annuities, we have an 8-year at 3.5%, a 5-year product at 3%, an Optimum 3, which is a 3-year annuity for 2%. And then we have a preferred choice, which is just a 1-year annuity, and then you can turn it and put it into one of the other 5 or 8-year products. It's a 1%. And then we also have SPIAs at 10-year, less than 10 years, and then greater than 10 years. That's 2.75 for the less than 10 years and 2% for 10 years or greater. Again, we have IRAs, Roth IRAs, and Coverdell, ESA. We were able to do that. And this investment growth fund, just so you know, I don't know if this is good for some agents to know this. This is for nonprofit organizations. Again, the agent doesn't make anything on this, but it's a good way to extend your area of influence. If you're on a board or you know people on a board, for example, I just dealt with a homeowners association. They have money in there, and they said, well, if I put it in a CD, we're not getting anything. But if they put it in to our product, they're going to get 2.25% of interest on that. And then if the lowest it can go is 2%, but there's no penalty. You have to have a minimum deposit of $5,000. If they take money in and out, say to pay like grass cutting or whatever, or if you have a private school that might be maybe doing a fundraiser to build a building extension and they might have a couple million in there and they need to pay the contractor, they can take as much as they want out. It has to be at least a minimum of $100, and they can put in at least a minimum of $100 anytime, and there's no fees, no charges, or there's no cost for that plan. Okay, the two illustration softwares that we have. The first one is, and Micah probably can send this out to you again, so if you want to copy that down, you can. The first one is our illustration software link, which will give you a software link, and we're going to go over to that in a little bit. That's for your computer, your laptop, and then we have a mobile app. The second one is for your iPhone, your iPad. You can do a quoting. It's a condensed version. The first one will give you the full illustration with all the cash values. The second one just gives you the quote. It'll give you the monthly quote, the yearly quote, semi-annually and all that, but it doesn't give you any of the cash values. It doesn't give you the full illustration, but it'll at least give you a quoting tool, and then you can email that to your clients also from there. Again, we're located about 20 miles outside of Pittsburgh, downtown Pittsburgh, and we're in McMurray, PA, and then here's my contact information. So if you want to just take a moment to copy my cell number down and my email, and then we're going to move into, I think we should do next, Mike will go in, I'm going to show them that term brochure. So I'll give you guys another minute. And then what do? Get escape, Mike, okay, escape. And do you have that on my thumb drive? We're just changing over here. So, sorry, we're just changing over to another, okay, there we go. Okay, great, I got you, thank you. All right, I'm going to go into the youth term brochure. Okay. Slide that over here. Wow. All right, thanks. I'm just going to scroll down. I want to show you the youth brochure. Again, this brochure it's just one page, and then what you can do is at the bottom of the brochure you can stamp your name or have your contact information on it. But I want to just go over the verbiage in that brochure. And Micah and them have brochures here, and also when you become a agent appointed to us, we send you a kit with brochures, so you'll have these and you can order these too online. Again, the issue age is from 0 to 22, and you can see the coverage is from 0 to 30, and then premiums are only paid until age 25, which is great. So at age 25, they're done paying on that, but you still have coverage remains until age 30. And then we'll talk a little bit about the conversion. I'm going to slide down there. Okay, an application, a parent, grandparent, or person with insurability, obviously, it's just like any other insurance policy or certificate. Someone has to have insurable interest to do that. Here's the conversion, and I think this is such a great impact. It says convertibility to any permanent whole life plan at or before age 30. You see this 50,000 face amount. That's without evidence of insurability. That is huge. I think that with our kids today, with onset of diabetes, don't want to be a negative nanny, but the thing is, I think a lot of times you think kids are healthy, and something comes up, and then at age 26 or 27 they get a disease state. The nice thing about this is that they're going to be able to get 50,000 of our permanent plan of insurance, either 20-pay life, whole life, or single premium, without any insurability, and it has to be at a standard rate. Okay, so that's fantastic if you look at our premium. But here's what I think you'll be interested in, all you agents. For the youth term, if you want to get a face amount of $10,000, it's only $17 annually, or if they want to do a single pay of $125. The $25,000 is either $27 annually or $300 single pay, and then the $50,000, which I think is ludicrous when I tell people this, it's $50 annually or $500 one-time pay. So that's the brochure for the youth term. And then if you have any questions, like I said, we can get you the brochures. And then at the bottom of the brochure, which I'm showing you down here, there's enough space where, like I said, you could put all your contact information. If you have a stamp, or if you want to, put a some type of print down there with your name, your contact information, whatever you want to do. We have a lot of agencies that just get them printed like that. They send them through the printers and they put their address and their logos on them.
Hey guys, think about that for a second. So we all know that life insurance can sometimes have a terrible retention rate. So for those that you're talking to, the prices are so low, the premiums are so low that even a single pay can be affordable for a lot of people. And there's any kind of fear of them canceling their policy, your retention is going to be so much higher because the policy is already paid off. I mean, look at that, $125, you got $10,000 already paid for. So you don't have to worry about them continuing to keep paying monthly payments and all that, and that's something that's very affordable to most people. So again, it's a really good way to keep your retention high with this company.
I'm going to take you to another program here. Our single premium, when we do the, you'll see the neat thing about our program here with the single premium is that when we do the illustration, you'll see the cash value that it grows in and also the guaranteed cash value. And we've never, ever, and I tell this as agents, we've never, ever in 128 years not paid a dividend. So when we look at the illustration software, I'll show you that there's a non-guaranteed side and a guaranteed side. I take a lot of the agents over to the non-guaranteed side because we've never, ever not had to do that in 120 years, so I feel confident that we're not going to have that happen ever. So, but we'll look at that. Let's see. I'm sorry, Mike. Right here, I think. Yeah, there we go.
There you go.
Is that it?
Okay. And then go to
right here, right? Okay, there we go. Okay, thanks. All right, I'm going to take you through this single premium. This is something that Micah has, and you can get it emailed to you, or you can call me and I'll email it to you, and you can put all your contact information in this. This is not copywritten or everything, so you can go ahead and do this. So again, what is it? This is something new for single premium, just to keep you abreast of this. When you're out with somebody who has a UL, a universal life product that might be imploding, they might have some cash value left in it, so maybe $5,000, $6,000 in it, and they look at it and they say, listen, I'm paying $160 a month coming out of that money, and so many months I'm going to have no more insurance unless I start funding it. That's one of the ways we use this single premium. The other thing is in comparison to an annuity. Some people say, why would I want to do this instead of an annuity? Well, I'm showing you why. Because it's tax-free and it's wealth transfer. And I talked to Mike about wealth transfer that we can do, and we can get a little bit more in depth into that. Again, why single premium whole life? Immediate increase in estate value. So as soon as you do, we'll do like an example of $100,000 for an annuity, $100,000 for a single premium. If that person dies with an annuity and they're in a 25% tax bracket, whoever's the beneficiaries, that money now is $75,000. So keep that in mind. Again, proceeds pass to beneficiaries, money passes directly to beneficiaries, guaranteed lifetime death benefit, no front-end fee or surrender penalties, unparalleled guaranteed internal rates of return, and then the cash accumulation is 100% liquid at any time. If you want to get the money out of a single premium at any time, you can do that. Again, this is a loophole in the tax. It's legal, but again, it's a loophole with it's irresistible wealth transfer. So you have for seniors or for someone who wants to leave wealth transfer, or someone who just says, look, I got money, but I don't want to put in an annuity because of the tax ramifications. So keep that in mind. Here's just a quick example. If you look at the female, age 65, and she does a portfolio here with an annuity. So you can see she has $100,000 in a certificate deposit, which is even worse than an annuity. And then you have money market, mutual funds, and then savings. If you look here, the same person with $100,000 in single premium, their death benefit in that single premium is $210. So if you go to the bottom here, and I know I'm moving kind of fast, you'll see their total estate is $150 here, but with tax ramifications. Over here, there are some tax ramifications, but that first $210,000, there's not going to be any tax on that death benefit. So by moving $100,000 from the certificate of deposit and purchasing a single premium whole life policy, the estate available to the insured loved ones at death increases by 73%. I mean, that's amazing. When you look at what you're leaving behind for whoever, or if you're leaving that for wealth transfer.
And you're going to have lots of people as you continue to deal with these seniors who are going to have all this money. I mean, let's just take some blue-collar worker that's worked his whole life, and all of a sudden he goes to retire, and now they give him a 401k and say, okay, well, here's your 401k worth, let's just say $250,000. Good luck and living the rest of your life with that. So this is a great way for them to greatly increase their net worth for someone who maybe otherwise has never had that much money in a lump sum before.
Yep. That's a great point. So again, it'll be a unique situation, but there's a lot of people out there. And don't forget, this is the illustration that you'll you'll run when you run it off our illustration software. But you can see the cash value here is the guaranteed surrender value. Then you got the death benefit, and then you have the total surrender cash value, and then the non-guaranteed death benefit. And we're going to go into that a little bit more with the illustration software. But you can see that in basically you'll see in 2 years, with most of these individuals, after the second year, they're getting all of their first money that they put in, getting it back, and it grows aggressively. So we'll do a couple illustrations to show you. But this is another, again, this is your presentation. You can take this and use this. But this just over here gives you a 10-year comparison of a single premium to alternative annuities and CDs. And I'm going to show you how you can do some things, unique things that our software will do, where you can plug in like a single premium versus a CD or an annuity and see how the cash value grows, and then what the difference is, and the amount of money that they can make a difference, like we showed that the estate was 73% increase at the end of their estate. Okay, again, minimum face amount is only $5,000. That's face amount. Again, that's not money they're depositing in, it's face amount. All our products go our life insurance for 20-pay life, our whole life, and our single premium can be issued from age 0 to 95. Again, I say from 0 to age 95. The minimum face amount for 20-pay life and single premium is $5,000, and our regular ordinary life is $10,000. Okay, and they're fully underwritten. But again, you know, healthy people on this single premium, if they're fairly healthy, we'll get them through. And then there's some alterations that we can do with the cash value. Keep the cash value the same, but we can lower the death benefit if it's truly for a wealth transfer. And we can talk a little bit about that before. But I'm going to scoot through this a little bit. This is just some marketing strategies. Again, you know, for clients or uninsurable, find a relative, comparing the single premium to fixed annuities. And single premium is a very unique product with guaranteed benefits and features. Again, that's what you have to find, that client. And these are just some marketing strategies that you can use. Again, this information can all be transferred over to you guys in the way of, you know, making that PowerPoint presentation your own. Okay, so what we're going to do now is I'm going to go over to the illustration software. I guess everybody, hopefully they can see all that, right? Okay. What I'm going to do is just go through this real quick and I'm going to take some time here and just show you how the illustration software works. Again, you'll see the products here. You have whole life, if you can follow my mouse, the term life, and annuities. So here we're going to stay with our whole life products, and let's just do a 20-payment whole life plan. Let's say for a 55-year-old, you see the age. Again, North Carolina, we're going to go non-tobacco. We're going to put the we'll keep the face amount at $15,000, and then I'm going to go over here and hit monthly. And you can see then at the bottom, it gives you $40.82 is the monthly. Here's a little unique thing you can do. You can come over here at the bottom. If you follow my cursor, you'll see where it says plan comparison. You can hit plan comparison, and what it does is then gives you the pricing for ordinary whole life. Again, you can see it's only roughly around $4 difference. But if that age 55, I'd rather see them in a 20-pay life, because then there's a stop time in 20 years, and we'll show you the cash values. In this first one, ordinary life, you know, say that person lives to be 85, they're going to pay on that for 30 years, and it's going to increase what they put out for their premium. And then the single premium for that amount is actually a monthly $534 annualized, you know, $534.60. But over here, I'm going to come up here. You see there's a quick quote. If you hit quick quote, that just gives you the one page where it shows all the premiums and their cash values and how that grows. If you come over here, you'll see the first column is the contract premium, the guaranteed cash value. And then remember I told you the non-guaranteed cash value. Again, you can't tell your client that that's guaranteed, but we've never, ever in 120 years not paid a dividend. So I don't see that happening. So I always take people to this column. So the nice thing about this, if you look at the cash value here in 20 years, at age 75, on the non-guaranteed side, you'll see that there's 10,000. I'll draw this here. So it'll be a little easier here. You'll see here, there's 10,356 in cash value, and here's what they paid in. So it's like a return of premium almost product. But look at the cash value or the death benefit, how it grew from 15 to 17.8. So 38, basically $2,800 difference. And that's what's nice about our product compared to we're not a true final expense because we are underwritten. But when you look at that compared to some other products in the final expense market, if you have somebody who can pay that, which is going to be the lowest, and they're fairly healthy, then again, they're going to get dividends and cash back, and they're going to grow at paid up additions. So that's something that the other final expense companies are not going to be able to give to you. Again, I'm going to take you out of here. And again, all I did to draw is I hit that little pencil up here in the right-hand corner, and then once you see the red around the box, then you can circle, which you can do that with some of your clients. I'm going to take you to the full report. It's up here. Double-click that. There we go. Now, this is the full report, what you'll be able to give to the client, and they'll sign. What's nice about this is, you'll put your name on it. Let's see here. You'll have your name on it up here. Let me go to the first page. Right here, it will be prepared for, presented by, the agent, and then it'll have your state, so you can put the client's name in there too. All right. Now I'm going to take you down to the page where we were looking at. Again, this is the full illustration. You'll see this 20-pay life is paid off at, in 20 years. But then you can see how this continues to grow. So let's say that person lives to 85. They put the $15,000 as their first death benefit. Look how the death benefit grows, almost $5,000. But look at the cash value. They paid $9,000 in, $796, and their cash value down here is $14,457. So basically $5,000 an increase in cash value. And they could take that cash value out at that time too and say, listen, I'm putting $10,000. I'm going to give it to my daughter. Tell her to bury me with it, and I'm taking $5,000 and I'm going on a vacation. So those are some things that we do differently with our cash values. Again, I'm going to take you back out here. I want to take you through a single premium whole life. Again, I hit single premium. Let's just do a 60-year-old, and let's just do this for a quick, say, conversion. Say that person is in a UL, and that they might have $20,000 worth of coverage in a UL, and they say to you, I have $7,600. So we're going to come over here and we're going to select premium. I'm going to put $7,600 in there. Okay, and you can see the $7,600 then with the whole single premium. Okay, and then we're going to go over here and do a quick quote so we can see what that buys them in insurance. So that's that money that they put in, that $7,600 that they said that they have in cash value because their UL is imploding. They had $20,000 coverage, even though we're not there yet. You can see the first year is 16, and then the 10 years out at age 70 it's 17, and then let's say at age 75 it's 18,000. At age 80 it's 19. So they're almost where they're at, but don't forget they're not paying anything on that anymore. And where they were going to have that UL implode, now they don't have to worry about it. They paid the money from their cash that they had in there. This is a true example that I did for a gentleman. He was actually 65, so he's a little bit younger here. But you can see he's going to have life insurance. And say he lives to 85, he will have $20,000 worth of coverage with $15,000 of cash value. So his cash value doubles in 30 years. Ordinary life. Let's do ordinary life. Let's go back to the quoting system. Again, remember, ordinary life has to be at least a $10,000 minimum. The others are $5,000, so let's do $10,000. And let's do a 60-year-old. Let's do a male this time. All right, a male at age 60. We'll do the monthly. You can see monthly is $34.37. So we'll run a quick quote there so you can look at that. So you can see basically they're paying the premium is $412.44. In 20 years they're putting in $8,400. The cash value is only $64.95. You can see it's a little bit less because they're not paying a lot of money for the insurance. But again, it'll still, if somebody wants, that's what they can afford. Again, you saw the monthly premium is $34.37. All right. A couple of things that you can look on here. Resources. I just hit that. Up here in the corner, you'll see resources. You can have a life insurance, needs calculator, life expectancy, and then the agent reference guide is something that you guys will probably see of interest. Can I move that over there? I'm sorry. 1 second. The agent reference guide is everything that you'll need to know about our company in this little booklet. You get this booklet sent out to you. It's about 5x7 book, but in here there's talks about what states we're in. I'll take you down there. It does the medical. We're going to go down to see where the medical is. Here it is. Here's the medical, so you know what you're looking at. The ages. So it really, if you're under $25,000, for most of the age groups, you're not going to have to do an APS or a medical pyramid, but you can see here. So that's why I said uniquely, most of the times when you're doing your application, when you're under that amount, they'll just, if they have questions on your health, they'll do an APS. So they'll get the APS from the doctors. But this booklet that we were looking at here, it's called the Agent Reference Guide. That's up here in the resources. Also, you have your underwriting guides. It's under there, but there's a lot of unique things here that you can do, like I said, with the quoting. Also, I want to show you here in this part where it says product information. If you want to do paid up additions, you can change it to cash, reduce premium, accumulate interest, and paid up additions. I always tell everybody select paid up additions and then add a rating. It's very simple. If you hit this standard area here and you hit the tab, you can do any table you want. And maybe if you send me a case to the underwriter and they say to you, look, I think it's going to be a table 4, then you can go in here table 4 and quote them. And, and quote them, and it'll jump up. You can see for that case here, it was regular 34.37. It jumped them up to 68.74. In some cases, even with the table rating, will be less expensive than some of the competitors. Probably about 80% of them. So, and there's one more thing I want to take you through. So we have a little bit of time. And then Micah might intervene here, some things that he wants to talk about too. I'm going to take you through this. I have a flyer that I did, and I have NSS, let's see here, 20-page flyer. This is something else that you guys can use also. This can be used for your own advertising and marketing. Again, Micah will have it, and I'll have it. At the bottom here, you can see where at the bottom it says my contact information here, but this is where you can change it because it's a Word document. But I just want to take you through this flyer. We have a lot of people that send this out, especially as leave behinds when they're doing any Medicare or Medicaid supplemental benefit work, or some people that are even in property and casualty that they get into life insurance. They leave this with their customers or do mailings. But you can see here how inexpensive this 20-pay life is. So if you go up here to the first age bracket, it's age 35, 45, but I think where the rubber meets the road is here with these age groups, age 55, 65, and 75. So if you come over here, look at $10,000 for a age 55 male, it's only $32. For a female, $27.22 a month. Same thing for age 65-year-old male, it's $42. For a female, it's $34.80, and for an age 75-year-old, it's $65 for a male and $52.28 for a female. But you can see the cost here for even $15,000. For a 75-year-old female, it's only $78. For a male, it's $98, and for a 65-year-old female, $52. For a male, $64. But this is something you can use. This is a promotion. It's approved. Micah has it. I have it, and we can send it to you. And again, you can change your contact information here at the bottom. If you have a logo for your company or your organization or your agency, you can change it. But I just wanted to show you the prices because when people get this in the mail or they get it dropped off, the first thing they do, like Micah said, the retention, they shop around. And usually when they get this, we get a ton of calls because they say, I'm paying double that or whatever savings they can save, it's savings. Some of the individuals in the final expense market that are buying that product, they're on a fixed income month to month. And so it's very difficult for them. I'm going to hit one more thing before we kind of ask for some questions. I'm going to hit the helpful hints here. We have this on PDF, and I can send this out to you. Just right here, Micah. Look, I'm learning. He showed me that. Unbelievable. This helpful hints, underwriting tips. I just want to go through this quickly with you. But the application you want to use is our long app. It's LAO4. It's a 4-page app. Micah will test it. It's the most simple app there is out there. The LAO5 app where you see here is a 2-page app. I would recommend that no matter who you write, because this long app is usually for over 50,000 or over somebody age 60 or older. But I would use the LAO4 app on everybody because it's just a sheet of medical questions that, you check the boxes because it gives underwriting more information and they won't have to call you and email you about some of that stuff. So if you put down for memory, just use the LA4 app all the time. Again, no whiteout on the application. Please draw a line through things. I'm trying to think here. Oh, the HIPAA form. When you have a HIPAA form, please do not put the doctor's name or dates of service on it because sometimes our underwriters will send it to several doctors. Maybe there's an internalist doctor and maybe a cardiologist. So if you just sign it and they sign it, then we can send it to several doctors instead of asking for a new form. We order all the exams and labs if we have to do that, so you don't have to worry about that. Also, again, remember, NSS asks for you we do electronic bank draft, but we always have to have the first month premium in a check or a money order. So if it's $34, $37, like we were looking at that one individual, you would get a check or a money order. Or if they don't have a check or money order, we can't do it. But we can still do say they do a money order and then they want to take it from their bank draft and they don't have a checking account, they can just get a letter from the bank stating their routing number and their savings account, whatever way we do that. But we can work that out. But again, you can use a check or money order. And some of your individuals that don't have checks, it's a big thing for one of my groups in New Jersey. They're in a lower income area. They have people that don't have checking accounts. We send out premium notices every month. So if they want to use a money order every month, we'll send out the premium order every month, and there's no extra fee for that. There's no extra charge, whatever it is. It's $34, $37. They get a money order, they can send it in monthly. So that helps solve some of those issues. The W-9 form, we put that in all the applications, but you don't have to fill that out. I always tell you that. The underwriters always won't let me not take that form out, but you'll see it when it comes to the application. Don't worry about it. You don't have to fill that out. And then again, on here, you'll see the illustration. The last bullet point here is our illustration software for the handheld. And then also, Micah and I have the illustration software for the one that we just went through, the large illustration software that you can use on your computer or a laptop. So when you're doing a full illustration software where you can have your client sign that. This here is the one for illustrations that can be done on your computer. And then we have the one for the handheld also. Okay, Mike, I'll leave it back to you, and then we can open it up for some questions.
Okay.
Okay.
Thank you, Jeff.
Thank you.
So obviously there's a lot of information given. I just like to basically recap some of the stuff that we went over and basically why choose NSS. One of the first things that Jeff talked about was the youth term product. Great product, incredibly affordable, as you saw. What makes it so great is the conversion option. You're talking about a policy that you can write from age 0 to 22, and they're paying the premium up to age 22, and then they're still covered till age 30. And then, regardless of insurability, they can still convert that over to a permanent product, and that is a great option because, like Jeff said, even his child unfortunately had some heart issues, so they would know they're going to have a hard time getting insurance. So what better option than to save their insurability from birth and make it so that it's a policy that's, one, like I said, very affordable, and two, will cover them for the rest of their life if they choose to do so. So that's number one. It's a great product. Number two, we also discussed the whole life options, and I showed you when we first started on our quoting tool how NSS is always going to be on the top as far as rates go. So granted, they are fully underwritten as compared to maybe some of the final expense carriers out there that give you a quick response and you know exactly where the underwriting is. But I assure you, if they are healthy, they are always going to have the best rate with NSS. And at a time when it's so competitive out there and it's so price-driven, what better option than to come in with the lowest option? And not only is it going to have the lowest premium, it's also a better product. With final expense, that cash value and that death benefit does not grow over time. You're giving them a whole life policy that's growing in death benefit, that's growing in cash value at a cheaper cost. So the only downside would be is you have to wait a couple weeks for it to go through underwriting. Now, I don't know anybody that needs that policy written the next day. So if your client does not mind waiting a couple weeks to get the best product at the best price, and if they're relatively healthy, Why not go through that? Because I'll tell you what, that's going to save you a lot more time than having to go and try to chase them down after they cancel the policy later on because someone came in and offered them a lower premium. So that is a huge, huge factor as far as who you're choosing when doing these final expense and whole life policies. And the biggest, that's right, the biggest option that we wanted to go over too, which I don't think we even mentioned in detail, was the scholarship opportunity. So guys, I want everybody to pay particular attention to this. I'm going to pull up this illustration software again, just so we can see exactly what we're talking about here for children. So we talked about the advantage of the seniors and the low cost and all of that, but let's talk about why it's so important to do a policy for these children and what kind of value you get. So just bear with me 1 second while this updates. I don't know why it all of a sudden chose to update, but of course now it does. All right, come on.
You know, while Mike is doing that, the scholarship thing, if any child has a permanent plan with us, not the term one that we went through, but a permanent plan, a whole life single premium or a 20-pay life, and they have it for 2 years, then they qualify for the scholarship. And what the scholarship is, once they graduate high school and they go to a tech school, a community college, a nursing school, a four-year university, whatever, once they get a C average and accepted into college, they qualify for a $500 scholarship every year that they're in college. So that would be $2,000 of scholarship money once the client or the student has it for 2 years. So you always want to make sure someone has it going into their sophomore, would be a sophomore year, so that they have it their junior and senior year, so they can qualify for the 4 years that they're in college.
So let's just compare that, what he just said. So let's just take a child. Let's say that your client has a 5-year-old child, and let's say that it's a male. We'll even do a male. Obviously, non-tobacco, we'll say North Carolina. And let's say that they just wanted to do something to cover them if something were to happen to them, and we'll do a $10,000 benefit, because that's the minimum that would qualify for the college scholarship. So you have a 5-year-old child that's planning on going to college one day, and you want to get them a $10,000 policy. I want you to pay particular attention to what this is going to be. So if you're looking at this, let me do a 20 pay actually, just so I can show the monthly premium. So we're going to do a 20 pay. This is for a 5-year-old child. $10,000 whole life policy. What does that break down to? If you can notice, $78 a year on a 20 pay. If you look at this monthly, $7.02 a month. If your client can't afford $7.02 a month for their child to have a $10,000 whole life policy, then there's a problem, because there's also, if you want to do a single premium, check this out. Single premium, meaning that's only one payment and the policy is completely paid up. There's not another premium that needs to come out of your pocket. For a 5-year-old on a $10,000 death benefit, you purchase an entire whole life policy paid up for $880. So think about that, guys. You've got a whole life policy for a child on a 5-year-old that's paid up, $10,000 death benefit, that's going to grow in cash value and death benefit. And what else do they get? When that child goes to college, each year that child is in college, they will qualify for a $500 scholarship each year that they're in school, up to $2,000. So for that one payment of $880, you got them a $10,000 whole life policy and a $500 scholarship for each year that they're in there. Now, I don't know how many of you have kids that are currently in college, but books are expensive. And I promise you that $500 is going to be a great handy to purchase some of those books and help out with some other finances that the child may have. And again, this is only for $880. I look at it also as a great gift for grandparents to children. If you've got a child that, let's say that they're a sophomore in high school, and the grandparent is wondering, what can I get them? Okay, well, let's take a look at it. Let's say the child is 16 years old. They've got 2 years left of high school. Single pay, $1,370. And you've got a $10,000 whole life policy, and this child, as long as they have the policy for at least 2 years, which they will, because they have it for 2 years in high school, when they go to college, they're going to get a $500 scholarship. So granted, as long as they maintain a C average, you're already making money. Not to mention that whole life policy is going to grow over time for the next 20, 30, 40 years of that child's life, or as long as that policy is in force. And they don't have to pay another dime. That's the other thing. A lot of whole life policies out there, the grandparents or the parents buy it on the child, and then what happens if the parents or the grandparents pass away? Now the child has to pay that premium. Don't make them have to do that. Show them a single pay whole life policy that's incredibly affordable, that you're guaranteed to make money on as long as that child makes at least a C average, plus it's going to grow in death benefit and cash value. To me, for a child, there is no better option. And the reason why they're able to do that with the college scholarship is because they are a fraternal organization. They are able to offer those kind of benefits. There are also other benefits, too, that we can send out in a flyer of things that they qualify later, like taking classes when you're an adult. There's reimbursement on that type of thing. So tons of options, incredible pricing, great product, grows cash value and death benefit, and your retention is going to go up guaranteed. Rather than just doing a quick final expense product. Now, granted, it's not going to be for everybody. They do want you to be remotely healthy, but again, if they fit that mold, they're the ones to go with. And I will also say this, based off of my experience with working with Jeff DeSantis for the last few years, he is one of the most responsive carrier reps that I've ever dealt with. So if you have a question, concern, anything, he will get right back to you as quickly as possible. He will walk you through the process. They've also have communication with the underwriter. So if you need to contact an underwriter, even their underwriting team is responsive. I've sent emails to them, and I've got an answer that day, specific answers on particular underwriting questions. So again, they have the materials, they have the benefits, they have the support, and even if you're brand new to the life industry, they'll able to help you from beginning to end. So guys, again, this is why we want to push NSS so much and why we're lucky to have them as partners under the Messer platform. I want to go ahead and just see if there are any questions real quick. Bear with me 1 second. Let's see. Is E&O insurance required by NSS? No, it is not required. So you do not have to have E&O. However, if you're wanting to, we highly recommend E&O insurance. As a matter of fact, our online contracting system, which is Surance Bay, to create your profile, it is going to request your E&O. So even though NSS may not require it, we do prefer to have that. It's only protection for you as well. And we also have the best E&O on the market as far as pricing. So if you need to make monthly payments, we're welcome to do that as well. But good question. Let's see. Pop this off. Let's see. How do I pop this? Oh, here we go. There we go. Now I can see it. Can the youth term start annual and change to annual later in the year, i.e., when tax refund comes?
They can start with a monthly, and then if they need to pay it off one time, you know what I mean? They can do that. So in other words, if they start out annually and they decide they want to pay, it off as a single premium, we calculate that and they can do that. Yeah.
And can the youth term plan start annual and then change to lifetime later?
No. Once you mean a term product? Mm-hmm. No, once it's a term product, it's a term. Yeah.
Gotcha.
Stays in there. Yeah.
Can we see someone in a close non-resident state if you are not currently licensed in our resident state?
Yes, you can. You can do that. That's one thing that's unique about us. If you have, say, for example, Tennessee, we're not in Tennessee, and you have a person you want to write in Tennessee, you can do two things. You can do, and you're in North Carolina. You're an agent in North Carolina, and you want to write somebody in Tennessee. All you do then is you can do it through the mail, and you use a North Carolina application for somebody in Tennessee. They mail it back to you. You can do that. Or say that person is visiting in North Carolina. You still use a North Carolina app, you can sign them up too, like that. So, hope it answers the question.
Here's another question. Can some of the annuities be written to age 95 as well?
Yes, they can. What we do is, if you have any annuities for a person, for example, and they're in their 90s, let me know, because I have a direct line into the president, so you would email me and say, hey, Jeff, I have a 94-year-old person, 95-year-old person, female, wants to put $180,000 in. Just say that and let me know, and then I send it over to the president, and he just says yes. Even in fact, I just do it now as a courtesy, but he every time that I send him, he approves them. And the amount now, our open amount right now, since our rate was pretty good, we had a $100,000 limit, but right now it's open. So if you have somebody who has a lot of money, coming in for something, this is the time to put it in, because you were putting a limit on it to 100,000 to 150 per client.
And that's a great point. So, and remember, guys, you can write these policies, these whole life policies, anywhere from age 0 to 95?
Yeah.
To 95 years old. So, you know, a lot of these final expense carriers out there won't go that high. This one will go all the way to age 95. And again, it's a better product because it is growing over time. So, should be able to be a great fit for most of your clients out there. It'd be that are relatively healthy. You can contact us at Messer Financial, 704-568-9649. We'd be happy to help. Also, we also post all of our webinars on our website. So if you need to go back and revisit this, that's completely fine. I'll go ahead and show you that real quick. Under Messer Financial homepage, under Agent Resources, there's a Messer Learning Center. We post all of our webinars on Tuesday. So this webinar will be posted on next Tuesday, and you can go back and watch it at any time. You can narrow it by product if you want to, just added, whatever the case may be, whatever you're interested in, they're going to be available. And again, use us as much as you want. We're here to help you out. Jeff is also here. He gave you his contact information. I will be sending out some information to everybody who was on this webinar as well, with the quoting links and anything else that you might need. So again, we want to thank everybody for taking the time to sit and listen to us today. If you have any questions, contact us directly, and we'll help you in any way we can. So again, I want to thank everybody and hope everyone has a great day. And thank you to Jeff DeSantis for joining us.
Thank you. Appreciate it, everybody. If you need anything, give me a call or an email, and I'll get back with you.
Bye-bye.